Friends, welcome to market analysis for the week of October the 26th. As usual, we will start our analysis off by taking a look at the calendar here for upcoming week. However, before we dig into that, let's have a quick review of the events from last week. The biggest thing that happened was Draghi's statement. We saw Draghi being quite dovish, and as a result, euro dropped quite a bit. He talked about potentially extending the QE program and also expanding the amount of asset purchases they are doing. And also a surprising talk about potential rate cut, which is what the market had not expected. And because of the level of dovishness in his talk, we have seen euro just fall through the floor there. We also saw a Chinese rate cut, which was a surprise, and because of that, we have seen, in general, US dollar strength. And also the data that came out of the US last week was positive. The disparity there has really pushed the US dollar up, and we've seen a lot of strength in the US dollar. So it's to be seen whether that strength continues, especially with FOMC this week. So we'll have to see if that strength, US dollar strength, continues, or will there be a pullback. So starting the week off, we have German IFO business climate number coming out at 5 a.m. Eastern on Monday, and then it's a fairly quiet Monday rest of the day. We have new home sales out of the US at 10 a.m. Eastern, and going into the Asian session, we have trade balance for New Zealand dollar at 5:45 p.m. On to Tuesday here, we have preliminary GDP number for British pound, which will be important at 5:30 a.m. And then into the US session, we have core durable goods orders for the US dollar, and then we have consumer confidence number for the US as well, which will be important for US dollar here. At 8:30 p.m. into the Asian session, we have CPI for the Australian dollar. Going into Wednesday, this is really important. We have FOMC statement and federal funds rate. At this time, we are not expecting any rate changes. However, market will be looking to the FOMC statement to gauge if there is a potential for interest rate hike into November or December of this year. We also have a New Zealand dollar official cash rate and rate statement. We have seen New Zealand dollar out of interest rate cuts. We started off with 3.25 and now we are at 2.75. With the way things have been going in the New Zealand economy, we could see a potential surprise cut. However, the market is not expecting a cut. If there's a surprise, we will see a negative impact on the New Zealand dollar as a result. And also to keep an eye on, if you're trading the New Zealand dollar, to keep an eye on the rate statement. We may not see a cut here right now. However, the dovishness of the statement could push the New Zealand dollar down as well. So if you're trading it, keep an eye on that. Going into Thursday, we have CPI numbers, German preliminary CPI numbers, Spanish flash CPI number, and unemployment change for Germany. And we also have net lending to individuals for the British pound here. And then going into the US session, we have advanced GDP number, again, a very important number for the US dollar here, and unemployment claims for the US as well. And then we have ANZ business confidence number for New Zealand dollar in the Asian session, and monetary policy statement for Japanese yen. Into Friday, we have Bank of Japan Outlook report and the press conference. A number of other numbers coming out for the euro here: German retail sales, economic barometer number for Swiss franc, Spanish flash GDP number, flash CPI flash estimate, core CPI flash estimate for out of the euro here, unemployment rate for the euro. And then into the Asian session, we have Canadian GDP number. We have seen Canadian dollar take quite a hit as a result of the dovish comments from Bank of Canada, and also the negative numbers, the cut in actually in growth cut. We have seen the forecast for the growth cut in Canada, and as a result, we saw Canadian dollar drop. Also, the oil has been impacting Canadian economy. As a result of all of that, we have seen quite a drop in the Canadian dollar last week. We have employment cost index for the US dollar. Other than that, we have Chicago PMI number and revised consumer sentiment number. Not as important as some of these other numbers. So the highlight of the week will certainly be the FOMC statement and some of the GDP numbers coming out. Let's take a look at the technicals now. So we'll start off with Euro US dollar here. This is the weekly chart, and as we can see, we had a bearish sentiment or bias last week, and now we have seen a huge drop in euro because of the dovish comments out of Draghi, and then the Chinese rate cut here as well. This week now, based on the weekly chart here, the bias is to the downside, and we may see a pull up. We do have FOMC on Wednesday, so that could cause a bit of a pullback, so be mindful of that. So this 1150 number level looks good, or potentially even higher up, so we'll have to keep an eye on that to see if there will be enough market sentiment to actually push euro up a bit, or are we going to see more negative sentiment towards euro, in which case we are looking at this 108, potential 108.50 or 108 level for the euro. Let's take a look at the daily chart here. We have seen quite a drop in the euro, in terms of the daily here, very inefficient move. So now we may see a potential pullback, but right now there is momentum is to the downside. So depending on how far the pullback is, we may see this week we are looking for a further move to the downside, a pullback and then a potential pullback and further move to the downside. So these levels 108.50 or 108.100 are certainly could be the target. So that's what we're looking for, potentially pulling back into this level here or further up here. 1150, though that would be a nice area for a pullback, and if the sentiment turns around, we may see pullback further up as well. However, right now it is quite negative. So bias in terms of weekly and daily, both to the downside for the euro dollar. Let's take a look at the pound here. For the weekly, we have seen a nice reversal here for the British pound. We see two rejections, two pins into this 5,500 level. The price tested that level many times during the week and rejected that. So that gives us a nice bearish bias, neutral to bearish bias for the pound here. So we may see a pullback, and a potential level we'd be looking for a pullback would be this 53.80 level. Looks nice for a potential pullback, or we may even see a pullback slightly higher and then looking for a potential move to the downside. So in terms of targets here, this 52.50 level looks nice. And then further, we may be looking at going into these levels here, 51.50, and then potentially into 5100. So those levels have opened up to us now that we have seen a rejection of the upside. We have a bearish outlook and looking for a move to the downside in pound here. So let's take a look at the daily here. So this is pound US dollar daily. These are the levels. This 53.80 level is nice. We'll be looking for a pullback up into that level, or potentially into this, depending on how strong the move is, even 53.50 could be a good level for a pullback, or this 53.80 level. Those are both nice levels for a pullback, and then looking for follow through to the downside. In terms of the daily candle, this was very nice, close to the downside. We saw the price kind of get stuck in the range here for a while, and then it moved to the downside. So now we're looking for potential targets of 52.50 here, and then moving to the downside 51.50 and potentially 5100 for the pound. So both weekly and daily, the bias is to the downside. Okay, dollar CAD. This was, again, we saw a lot of strength in the US dollar, which was due to just one broad US dollar trend. However, we also saw dovish comments out of Bank of Canada. The growth forecast was cut, and the state of the oil prices have been quite low. As a result, we saw US dollar push up against the Canadian dollar. So based on our weekly chart here, This is a nice morning star formation, so we're looking for a potential pullback and then move to the upside. And this 3420 level certainly becomes available again, so we'll be looking for price to break above this 3200 level, and if it holds above the 32, maybe back test of 3200 for potential move to the upside. Let's take a look at the daily chart here. So in terms of the daily chart, this is more bullish to slightly neutral here because we did see a bit of a pullback into the close of the day. However, we did see nice rejection of this 3130, 38 level. So we're looking for a potential pullback and then move to the upside. So in terms of the pullback, this 3135 level looks nice. This one here, 3080 level is nice. And of course, this 3038 level or 50-ish level, 3050 level would be nice levels for a potential pullback and then move to the upside. So once the price starts holding above this 3200 level, we may have an opportunity to take a back test of this to go long here. And this 3420 would be the outside target, but inside here we are potentially looking at 3300 and then 3350 as potential targets to the upside. Now let's take a look at the New Zealand dollar. This is the weekly chart. The weekly candle close was actually quite neutral. However, we have been seeing the pullback in the Australian dollar, so we may see a further move to the downside. The weekly candle close is neutral, and let's take a look at the daily here. So we have seen the price trade in this range. The entire week price was sitting in this range. However, it has been making lower highs, and we see on Friday there's a nice rejection as well. It is running into a bit of resistance here at 7200. So once the price holds below the 7200 level, we may see a pullback into the 7200 level and looking for a potential move to the downside here. So some of the targets would be 7100, 7050, and then to the downside. So those will be our targets for Aussie dollar. Now let's take a look at New Zealand dollar. In terms of the weekly chart for the New Zealand dollar, again, we see a bit of a neutral candle. We saw a rejection to both sides. However, the price has managed to stay below the 6900 level. We saw a rejection of that level and a move to the downside. So this week we'll be looking for follow through to the downside here. Let's take a look at the daily here. In terms of the daily, similar to Aussie US dollar here, we saw price trading in the range, and then on Friday we had a nice rejection. We were making lower highs and then a nice rejection on Friday. So now we'd be looking for move to the 66.92 level here, and then once it breaks through, maybe a back test of this level for a move to the downside. This will be 64. So 6,500 would be a nice target here in terms of the price. So looking for, based on our daily chart here, we're looking to the downside. So bearish bias on the New Zealand dollar. So that's all I have. We've looked at both the fundamentals and the technicals. I'll see you next week.